Hey everyone, welcome to the KE Report, another daily editorial, this time chatting with Craig Hemke, founder and editor of TF Metals Report. Now Craig, we chat with you almost every week throughout the year, focused on precious metals. A lot of the time we recap the Commitment to Traders reports, talk about the news that has driven the metals price, but now we're pretty much at the end of the year. We're not going to chat with you the rest of this year, so great chance to look back on 2024 and really get a big picture understanding of what happened. Look, it's been a good year for precious metals, all really starting in early March as the metals started to take off and the stocks started to follow along. We'll start with gold here. Overall, right now, from the beginning of the year, gold is up 30%. It's up even more when you consider what happened at the beginning of the year when it was a bit slow. But overall, gold up 30%. That's a good year for gold, and it's even a little bit off of its highs from earlier this year. So, Craig, your takeaway from gold, what the key catalysts were that drove gold up so much?
Well, hi, guys. Yeah, happy holidays, Merry Christmas, Happy New Year, all that stuff. It has been a heck of a year. I like to write my annual forecast early, maybe late in the year, early in the year, usually posted that first or second week of January. And I do it, I always tell people, I don't do this for like ratings or to get new subscribers or anything like that. It's really kind of a guide for myself so that I can go back by the time the year is over and look back and see, okay, here's what I thought was going to happen. Here's what actually happened. What did I get right? What did I get wrong? And why did I get things right and wrong? And this year, you kind of alluded to it, Corey. It's been a great year. I thought it would be a good year. It seemed to me, as the new year began, that gold was kind of locked down a little bit. You guys will remember that first weekend of December last year. We had kind of this false breakout, big high volume reversal on the 2nd and 3rd of December. And it looked like, oh, man, that $2,000 level or slightly above was going to really be hard to break through. And I thought, that'll probably continue until we get some Fed rate cuts. Well, we got the Fed rate cuts, but we broke out well in advance of that instead. And as you said, Corey, we're up 25, maybe even, who knows, 30% by the time the year is over. And that will be, boy, if we get that high, it'll be the best year that, I can recall. I don't know how far we'd have to go back to find a better year. And so then it becomes, okay, well, what typically happens? What have we seen in the past when we've had really good years? Usually it's a follow-on, but not 25% again after that. So we'll have to factor that in to see where we go next year. But it has been a tremendous year, at least for those of us, with the physical metal. And the most mining shares are up too, but they certainly haven't provided the leverage to the metal price that many of us has hoped for. But you never know. Maybe that'll turn around. Maybe next year will be the year of the mining share. We'll see.
Well, Craig, for your sake, for our sake, and for everybody listening's sake, I hope next year is the year of the mining stocks. But they did do pretty good overall this year. At least the bigger producers, the gold and silver producers, and some of the quality developers. Maybe not so much the junior explorers, but it's been a mixed bag for sure in the equities. But let's look at silver because that gives us a big eye into what can happen in the gold stocks. Anyways, how are you looking at silver year in review?
Well, silver really has an interesting couple of weeks and ahead of it. And I hope everybody listening to us at least gives you something, it's like cheering on a ball game as we go into the end of the year with the bowl games and playoffs and everything else. Let's cheer on silver. It may not be a big deal if silver closes at its highest level that it's ever finished a year. But I'd like to find out if it's a big deal. I mentioned a minute ago about gold when it tried to break out in early December and then traded sideways for about 13 weeks, 3 months, and then finally broke out on the 1st of March and then really took off. And I remember in these weekly calls that we do, always talking about how important the long-term charts are. Not so much the daily charts and even the weekly charts, but the monthly charts and the quarterly charts. Because it's always been my experience that the really big money that can really move markets, it's more interested in the longer term stuff, not the daily or the 1 hour charts, but that long term stuff that reveals a more longer term secular trend. So when gold started breaking out first on the monthly chart, but then on the quarterly chart, I mean, that's when it really took off at the end of the first quarter of this year. It took off into April and May, and then it made new quarterly highs in September and shot higher again. Well, silver's been trying to play along, but as we know, silver is not anywhere near its old all-time highs. However, if you go all the way back to 2010, and then again, actually back to 1979, the all-time high close for the year on New Year's Eve, basically, is in play. The highest we've ever seen was actually not in 2011. We got wiped out really hard in the fall of 2011 after the peaks in the spring. The high close is actually Christmas Eve, New Year's Eve of 2010, when the spot price closed at $30.85. A spot price this year that closes on, I don't think New Year's Eve isn't the last day of the year. Well, I guess it is. 2 weeks from tomorrow. A spot price closes north of there would be significant. And the more you can get north of there, the more significant it is. I mean, if we could close spot at 32 or 32.50 or 33, 5-6% higher than it's ever been, that might get some eyeballs, especially if we get in the first quarter. And then it's one of those things we might look back on next year at this time and go, wow, boy, should have noticed that breakout on the annual chart. I hope we get a chance. That's all I'm saying. I hope we get a chance.
Craig, what about the stocks then? Like, you even made the comment, hopefully all this correlates into better stock moves, but look, GDX so far from the beginning of the year up 21%. It's up 42% from the low at the beginning of March. GDXJ up 30%, 51% from the March low. SIL is up 32%. So the stocks have done okay, but as we've talked about, it's been a much more selective environment. Does that all of a sudden just turn on a dial, or do you think investors should be focused more on these stocks that continue to run and lead the market?
Well, as we continue to lament the lack of flow of funds, which is what it needs, which is why we just need eyeballs and investment dollars into the sector, and we just simply don't have it. And so we've got to get something to change. I mean, I'm looking right now. Let me ask you guys this. Have you guys ever heard of anything called polka dot? You have?
The cryptocurrency?
Yeah.
Yeah, we cover all markets here, Craig.
Well, you guys are on. How about SUI? You ever heard of SUI? Not pig suey like you're from Arkansas. SUI.
I don't know that one.
Okay. Toncoin? You ever heard of Toncoin?
No, Craig, there's thousands of these things.
All right, well, no, I ask you this for a reason, though. Because between Polkadot at 13.9 billion market cap, total amount of coins and then what they're trading at, and Toncoin at a $15.7 billion market cap, somewhere in between there lies the GDX at about a $14 billion market cap. So that just gives you some idea of how, all of us in the sector, and everybody that owns the mining shares, we think it's a big deal. We all focus and we're like, come on. People are buying Toncoin instead, whatever that is. And so until we can peel some of that off, and again, what's it going to take? That's a topic for another day, I suppose. But this is siphoned away. These things like this have siphoned so much investment interest and investment dollars away from our sector that you can't help but feel like that's what's leaving us languishing.
Well, Craig, we're still waiting for the Hemke coin or the Turd Ferguson coin, so keep us posted if you get that. I guess it brings up an interesting point, though. We keep hearing that this time is different, and this bull market has been a little unusual in the way it's unfolded in the gold and silver equities. They are giving us a gain when the metals gain, but they're not giving us the 2 to 3 times leverage we're used to seeing in other cycles. Is it different this time? Is it fundamentally different? Are we not going to see that leverage anymore? Should we just be happy that the gold stocks are up 21%?
Well, I think the key, I guess, I shouldn't be declarative about this, like as if I know. I would suspect that the key will be the metals price. If gold has another 25% year next year, and we're sitting here right before Christmas next year, and we're talking about gold being, $3,300 or $3,500 an ounce. And silver's up there, oh, wait, look at this. Silver's an all-time high at $51 an ounce. Okay, that will do it. That'll get enough people going, wow, gee, maybe we should look at the math here and see how much some of these mining shares are making at these prices. So the metals first and foremost, I would think are gonna drive this. But at the end of the day, we need this excitement for the sector. We need people that want to be invested in the sector. And again, it just seems as if there's too much interest that is currently being siphoned away by other, let's call it non-dollar or all dollar alternative assets.
But Craig, is this going to change? So, like, we have a president coming into the U.S. that seems very cryptocurrency friendly. Some of his advisors are very cryptocurrency friendly. So, look, it doesn't seem like cryptos are going away. Where does gold fit in here? Are we just going to be still complaining about this?
Well, again, I don't want to conflate the two things together. I mean, really, not even silver with gold. I think gold has its own thing. Silver and the mining stocks are maybe a more speculative investment, where gold is, and this has always been the theme of my website, gold is its own, capital, its own, what's the word? Not necessarily an inflation hedge, purchasing power hedge, dollar devaluation hedge. Maybe one other point that I should make when I think about the mining shares is, and how they fit into the market in general, is they're not really growth vehicles. They're not perceived of as growth. And maybe they're not even perceived of as value, but I tend to look at them more as value stocks more than growth. Man, maybe that's just me. And value is terribly out of favor, even just in the last 2 or 3 weeks in the market. There's been a massive rotation, again, out of value, what's left, into growth. And so even in this context of, whatever is going to happen with Bitcoin and interest in that sector over the next couple of years, if we can get more of a market shift back to a traditional growth versus value, and when will that happen? But that may also draw more eyeballs. Because again, what is Agnico Eagle or Newmont or something like that, when it pays a healthy dividend and has such a high book value per share, if it's not a value sector? And again, everybody's looking at growth. I'll make one more point. I saw this last week. We may have talked about this last week. There was a day, I think it was Monday or Tuesday of last week, where the Big Eight, it used to be the Magnificent Seven, but now I think they include Broadcom in that. So anyway, the Big Eight were up on a day, one day. Those 8 stocks saw their market capitalization increase by $450 billion. 450, just those 8 stocks. And what did we say earlier? The GDX market cap is 14 billion. So the potential is there for this, huge run, because like anything else, you get too many dollars chasing too few goods. There's very few goods in terms of investment opportunities in the mining sector. If we get any of that cash to ever start flowing in our direction, just a little sliver of it, things will really explode. But again, now we're just still looking at what will eventually get that little itty bitty sliver, and we just haven't seen it happen yet.
Well, Craig, I would submit that if a company is growing its revenues and growing its margins and growing its ounces in the ground and growing through acquisition, there's still a chance for some of these stocks to be growth stocks. But good point that it's really mostly in the value category as far as perception right now. But you brought up a couple points there about the dollar, how things are priced in dollar, how gold is priced in dollars, that it's an anti-fiat store of value like Bitcoin. So in that sense, how are you looking at the greenback next year? How are you looking at the US dollar? What economic news on tap could affect the dollar?
Well, that's going to be a big part of my macro cast for next year. Is what is the history? How did the dollar trade after Trump's election in 2016 and then into 2017? Because his thought is, Trump's strong dollar and all this stuff, but actually, no, Trump prefers a weaker dollar. Trump prefers lower interest rates. He's learned that, by building all of his wealth in real estate, in debt. So, this notion that rates are going higher, the dollar's going higher, I just have a sneaky feeling that's going to be reversed as we get into the new year. We'll see. If it does, that's going to help us. But gosh, if it's even this Santa Claus rally stuff that I'm hoping to see here over the next couple of weeks. If the dollar just keeps soaring higher, it was up a point last week and rates were up sharply last week. If that continues for the final 2 weeks of this year, there ain't going to be no Santa Claus, at least not for us. So that's a big part of what we're going to have to wonder about next year is how will the dollar trade? Now, at the end of the day, problems haven't been fixed. I don't know if you guys saw last week, but whatever, the 8th business day of the month or 9th business day of the month, whatever it is, the Treasury Department puts out their monthly Treasury statement, very creative term for it. We are 2 months into the fiscal year here in the U.S., and the U.S. has already built up a $624.2 billion deficit in just the first 2 months. It's a pace 60% faster than last year when we had a $380 billion deficit in just the first 2 months. Now, you can't run rate that and go, let's see, 6 more times, that's 3.6 trillion, because there's some months like April where, tax receipts increase and you actually run a small surplus. But this protecting your purchasing power with gold is vitally important. It's going to be even more important next year because this train ain't stopping. The spiral is getting out of control. Things are worsening exponentially. And like you said, Chad, I mean, gold has its unique role that it plays in protecting your purchasing power against this currency devaluation. And so whether silver and the mining shares eventually catch up in the next few weeks, next year, well, they will eventually. But we know what gold does. We know what it has always done, and that's why I just continue to buy some more.
There we go. We'll leave it at that. Craig continues to buy more in the end of 2024. Undoubtedly going to keep doing it into 2025. But Craig, when we chat with you next, it will be in the new year, and hopefully we'll have a chance to go through your macro cast and get some of your predictions for next year that you share with everyone that visits your site. Again, Craig Hemke, founder and editor of tfmetalsreport.com. Craig, great chatting with you throughout the year. I hope you have a very Merry Christmas, Happy Holidays, and we'll chat with you in 2025.
Back at you guys. Thanks for everything, and have a great Happy New Year.